are joining us virtually. So my name is Esmira Javier. I'm from the Asian Development Bank, and welcome to our side event on banking on climate, going beyond climate finance, which we have collaborated with the Investor Watch, but also known as the Planet Tracker, as well as with the Forest Stewardship Council. So to start us off in this event, I'd like to introduce Asian Development Bank Vice President for Sector and Themes, Ms. Fatima Yasmin. Ms. Yasmin is responsible for the management of the Sectors Group and the Climate Change and Sustainable Development Department under ADB's new operating model. So Ms. Yasmin was the Senior Secretary of Finance Division of the Bangladesh Ministry of Finance, and she has more than 30 years of broad development experience, including in macroeconomic management, public sector and fiscal policy reform, trade, poverty reduction in government, and international organizations. She holds a Master's in Development Economics from Australian National University and a Master of Business Administration from the Institute of Business Administration, Dhaka University in Bangladesh. So, ladies and gentlemen, please let us welcome Ms. Yasmin.
Thank you very much, Esmira. Excellencies, distinguished guests, ladies and gentlemen. Welcome to ADB's side event, Banking on Climate, Going Beyond Climate Finance, co-hosted by Planet Tracker and the Forest Stewardship Council. I am delighted to see so many esteemed colleagues, climate experts, and advocates joining us today. We are very happy to have Ms. Rachel Kite as our panel moderator and our distinguished presenters and panel members. We are facing a climate crisis that challenges our collective resolve. The current level of climate finance is not enough to meet the urgent needs of most vulnerable countries and sectors. ADB has an ambition to fund 100 billion of climate finance from our own resources by 2030, out of which 34 billion is for climate adaptation. ADB has contributed more than 8.5 billion through our operations, which exceeded 8.5 billion alone in this year. As we strive to limit global temperature increase and ensure a sustainable future for all, the widening gap between the glaring needs and the available funds for climate adaptation and mitigation shows the enormity of the task before us. We recognize the invaluable efforts of other multilateral development banks, the private sector, the various organizations in mobilizing finance, especially for the most vulnerable population and critical sectors. However, financing, while a crucial catalyst, is only part of the solution. We need multifaceted strategies looking beyond financial transactions to comprehensive engagement involving long-term policies and partnership. Today's event will explore how we can adopt a holistic approach to climate action. We are privileged to hear from a diverse panel of experts from the governments, financing institutions, and the private and non-profit sectors. They will share their insights on how to achieve and surpass our climate and sustainable development goals. I will request each of you to engage deeply with today's discussion on this very important issue. The world is expecting us to deliver clear and actionable outcomes from this gathering. Thank you very much.
Thank you very much, VP, for welcoming and opening this side event. Since we're pressed for time, we are going straight to the scene-setting presentations. First off is our collaborative partner for this side event, John Willis, who is Director of Research for Planet Tracker and has over 30 years of experience in financial industry, having worked in a variety of roles, including research, portfolio management, and training. He will be doing a presentation on nature-based solutions. Over to you, John.
Thank you very much for those kind words, and thank you to the Asian Development Bank for inviting me, and thank you for your kind words, Vice President. I'll do a short presentation, and the reason I'm going to do a short presentation is, as Mira has told me that she's going to tell me off if I don't stick to time, and as I fear her, I'm going to stick to time. So I'm going to talk about nature-based finance. I'm going to move through this very quickly. If there are any questions or anything, please feel free to contact me either here or at our website, which is planet-tracker.org. Planet Tracker, just so you know, is a not-for-profit. We declare all of our funders on all of our research, and all our research and tools are available on an open access basis. That is the requirement that our funders place upon us. So let me try moving this. Where's the page down? No, it's not moving. That page down. Oh, Ismira, why won't this move at all? On here, sorry. Do I'm using the? No, yeah. No, it's not moving.
It's not moving.
No, sorry.
Here.
Oh, it's on that one. Okay, so it's on the big one. Thank you very much. So very quickly, I'll go through what is nature-based finance, and then I'm going to just talk about a sovereign example and then a corporate example. What I'm hoping you'll take away from this is we are not short of financial instruments. There are many financial instruments around, and they can come in many derivations. I think it's the willingness to actually put funding behind them that's a problem. So the mechanics are there, the instruments is there, it's people actually using them. So let me start. Very simply, we define a nature-linked instrument as one that its outcomes are linked to nature, very simple, or the assets that it's based on some form of natural assets which act as collateral. I hope that that's not really disputed. So let me talk about a sovereign example. We were discussing actually with various banks about a deforestation-linked bank, and I actually am delighted that part of this structure was used by the government of Uruguay in a groundbreaking bond that they did nearly a year ago now, and they very kindly referenced us in that work, which was very generous of them indeed. So what is a deforestation-linked sovereign bond? You'll remember from the definition I gave, you can either have outcomes or you can be dependent on a particular natural resource. This is not particularly complicated, and all we were saying was that a sustainability performance target, so where you see SPT, that stands for Sustainability Performance Target, would be in relation to deforestation or stopping deforestation. Now, I fully accept there'll be some experts in the room who will say exactly how do you define deforestation, what's reforestation and what's afforestation. I accept that, but these terms can be defined prior to issue. You have an issuing company and an issuing country, and effectively you agree how it's going to be measured, third-party verification, and then you report. And actually, in the finance, for those of you who are watching these types of instruments, we are reaching a really interesting phase, because some of these sustainability-linked bonds or sustainability-linked loans are now coming up for their first measurements. And for the more complex, those measurements, whether you meet it or not, the cost of capital, your coupon rate, your interest rate, can go up or down. And we've spoken to a number of financial institutions as to whether they regard this as good or bad. This is very different for fixed interest markets. And it's different because normally you would have your term sheet, you know the maturity, you know the coupon, but in these particular cases, the coupon can vary. So we are reaching a very, very important moment. So that is a deforestation bond. The other one is going to sound very peculiar. So I apologize before I say it. We're going to talk about a blue recovery bond. Now, it doesn't matter. It can be land or sea. We just wanted to give an option because let's not forget the nature of the oceans. This is somewhat different. We haven't successfully got anyone to take this up, but we are in some interesting discussions. The idea of this is you pay someone not to do something. Now, I know that sounds absurd, but what I mean by that, in this particular case, it was to stop overfishing. So what you actually do is, if I'm going to ask people to cease their livelihood, for fishing folk that is, I need to compensate them. What we know is nature can recover quite quickly if left alone, if ecosystems can kick in again. And there are a number of examples in the oceans. Unfortunately, often at times of war, you've seen substantial recoveries because obviously people don't go out fishing, or they do with caution. So the idea is that you're actually paid not to fish, allow the recovery to happen, and when that recovery happens, you then start paying back the coupon. And that is what this particular graph is showing. So the bars underneath the line is the upfront cash flow being paid by investors to stop people, in this particular case, fishing, but it could be applied to a number. That allows the stock, so take any stock you want to recover, and on that superior uptake, if you like, from the catch, you can then start to pay the coupon back. So that is the idea. The actual internal rate of return, depending on various adjustments, can change fairly dramatically, but it can be quite good. And if you want to go and play around with one of these models, go to our website and have a play around with it. So I'm going to stop there. I actually think nature-based finance is very doable. I think policymakers clearly should be supporting nature-based finance. I think there is an issue with transaction costs. You know, we've got a very expert financial, a financial expert on the panel, and I accept that transaction costs are higher for these, but as we do more and more of these instruments, so they will become cheaper, and you can start to replicate them, and you can get more scale. So thank you very much indeed.
Thank you very much, John, and thank you for keeping time. But it's good to know. I've never heard about deforestation sustainability-linked bonds. And of course, Blue Recovery Bond is something also new. So very innovative mechanisms. So for our next presentation, may I call on the Director General for the Forest Stewardship Council, Kim Carstensen, who has held the position since 2012. Kim has a deep background in environmental matters, including managing an environmental strategy consultancy, as well as leading the World Wildlife Fund, or WWF International's Global Climate Initiative.
I need some help here. So, thank you to the Asian Development Bank also from my side, and thank you to the presentation that just was given. I mean, for us at FSC, this is a tremendously exciting topic in the sense that we are not investors at all. We don't do any investment. Generally, we know nothing about investments, but we do think we have something that we can contribute to the conversation. What we are as a system is a fundamentally balanced standard-setting organization. Because one thing is that how do you actually define what is sustainable? I mean, if it's about forestry, it could be many, many different things. You can look at it from many different angles. What we do as a standard-setting organization is that we give exactly equal power to the economic interest, the social interest, and the environmental interest. In our system, nobody's ever completely happy. Nobody ever gets everything they need or everything they want, but they all get more than they could get anywhere else. And that is by this balanced power. What we do is that we are known to be certifying forests. I'm sure you will have seen products with our logo on them. And we sort of we trace that through the supply chain. Oops, that was quick. So we certify forests, and we certify the operations that take forest products and process them through the supply chains. That's how we've traditionally developed. Increasingly, what we are also doing is that we are making sure that we can verify impact of actions that happen in the forest, verify impact in different ways. This verified impact, we think, is extremely important also in this discussion, because I think what investors are looking for is impact of their investment on nature, on the forest in this case, and being sure that they can verify that impact in a way that is credible. So our balance sort of coming together on the standard gets you the credibility, because all interests are sort of taken into consideration, and this verification that our standards provide is giving you the next. What is really important in this setting is what impact are we then looking to verify? And at the moment in our ecosystem services procedure, we are verifying impact related to carbon, to biodiversity, to soil quality, to water, to recreational value, and as of next year, we will also verify impact related to cultural services, and in the future also to the spiritual values for indigenous peoples, for others who have other benefits from the forest than what is physical. And I think that's going to be increasingly important. You can do all of these, you can do one of these, but you have to do one of them in terms of the impact. Why is certification then a benefit? Well, one area is that whatever you do in your forest, you need to comply with regulation. And regulation seems to be coming increasingly in the area of forest management. We see the EU, European Union Deforestation Regulation coming up, and we see many other regulatory initiatives coming. And through certification, you can be more certain that you're actually meeting the regulatory requirements. And that, I think, is an important element for investors. And then measuring success through the verified impact is very important. And certification and the verified impact make sure that you can actually define performance indicators for the impact investment that you're doing. And certification can act as KPIs for sustainability-linked loans and other things. Examples of that is we are recognized in the Green Bond Principles as one of the performance indicators for that. We have an initiative with Prudential, a green bond of the $500 million that actually has FSC certification as one of the indicators, and we're working with Deutsche Bank at the moment on setting FSC standard requirements as KPIs for sustainability loans. We think there are many, many opportunities, and that nature and finance can come very much closer together on compliance with regulations, on risk mitigation, on fulfillment of ESG goals for companies, on measuring success, KPI setting, and meeting the needs of stakeholders. Thank you very much.
Thank you very much for that presentation. And indeed, certification can actually help us unlock finance, including climate finance. So let me turn this over to a panel discussion. It's going to be an interesting one. And I'm just going to introduce our moderator, a woman who may need no introduction, actually. So the panel will be moderated by Ms. Rachel Kite. She is a visiting professor of practice at the University of Oxford and Dean Emerita of the Fletcher School at Tufts University. She is a founding co-chair of the Voluntary Carbon Markets Integrity Initiative, a multi-stakeholder international organization enabling a high-integrity voluntary carbon market to deliver on the Paris Agreement. Rachel also served as a special representative of the UN Secretary General and CEO of the Sustainable Development for All, Sustainable Energy for All, and the World Bank Group Vice President and Special Envoy for Climate Change and Vice President of IFC. Rachel has advised the UN Secretary General on climate action and the energy crisis response to the invasion of Ukraine. She's a director of PIDG, a trustee of ODI, and a member of the Climate Policy Initiative. And, it goes on and on. So Ms. Kite advises private philanthropic capital and development finance on financial architecture reform, climate action and delivery against the SDGs, and speaks on lectures and writes on climate diplomacy. Ladies and gentlemen, please welcome Ms. Rachel Kite.
Thank you, Ismira. I think we're all very busy, right? We have no time and we have a climate crisis, so that's all that reflects. I'd like to ask the panelists to please join me. I think hopefully people are here. I know some people have been chasing to get here. So I'm not sure if the additional secretary from the Ministry of Finance in Bangladesh is here. He's not been able to make it yet. So Jwala Rambaran is here. He's a distinguished fellow in the Sustainable Finance Programme at Climate Works Foundation. Climate Works, if you don't know, is a philanthropic consortium, really, giving to climate efforts over the last few years. And it's really made a powerful difference, so I'm really delighted to have you with us. And then Manika Baj, who is the Director of Responsible Investing at Man Solutions. Hello, how are you? So it's really great to have some private finance expertise on the panel. And then is our Brazilian colleague here? The Brazilian colleague? No, okay, so Brazil and Bangladesh are somewhere together in the, which is good, it's like a World Cup. Football, not cricket. And then without any need for introduction either, Noel O'Brien, who is the Director of Climate Change at ADB at a time when ADB is committed to being the climate bank of Asia and the Pacific. It's been my privilege to work with the team at ADB over the last few months and to see the seriousness with which the entire management of ADB is sort of taking this imperative and trying to work it through every angle of their work. So, esteemed members of the panel, so I'm going to come first of all to you, Jwala. So, we're at this extraordinary moment where there's so much innovation in the financial space. We've got public money, we've got private money, and now we've got philanthropic money, right? And sometimes complicated capital stacks being discussed. How do you see both the knowledge that philanthropy can bring, but also the creativity now that philanthropy can bring to this space? What's important for you?
Sure. Thanks, Rochelle, for that question. Let me make reference to Climate Works' annual report, 2023 report on global philanthropy funding trends. And what that report basically said is that in the year 2022, total philanthropic funding amounted to about $811 billion. It sounds like a lot, but surprisingly, there was little movement from 2021. And a major reason was simply because 2021 turned out to be a landmark year for philanthropy. And as we moved into 2022, what they observed was there were significant disruptions around the global economy that philanthropy sort of held back on giving more. But what is also important is that when you look at the breakdown of those numbers by regions and by sectors, I mean, it's really telling, because in the ideal world, climate finance should be flowing from the developed countries to the developing. Right? That's in line with the Paris Agreement, but also in line with the principle of common but differentiated responsibilities. And what we've seen is, if you look at over the last 4 years, 2018 to 2022, there was about 2.3 trillion in funding from philanthropy, but almost $1 billion of that went to what we call the global north. Right? So again, concentrated in the US, Canada, and Europe. The developing regions which need the climate finance were not simply receiving it. And then if you look at when those monies are now divided into what we call the critical enabling factors, you find that about $1 trillion of those flows actually they go back into the soft areas. They do not go to the sectors and clean technology. Right? So I think there's room for philanthropy to shift and to increase in scale, but also to change the composition of how that funding is moving to the more critical sectors. And our final point is that what we see emerging now at the level of global philanthropy, and this is quite true for ClimateWorks Foundation, is this focus on, we call it JEDI at ClimateWorks, justice, equity, diversity, inclusion. We've actually added belonging to that. So the whole notion of a just and fair transition is starting to get embedded into the work of global philanthropy, and I think that's a trend that is certainly welcome.
So can I follow up a little bit just before I come on to the rest of the panel? So if our Bangladeshi brother were here, right, he would talk about the domestic mobilization of capital, and we've seen some of the innovation from the opening up. And of course that domestic mobilization of capital has to be complemented by an infusion of international public capital and international private capital. And the focus of Finance Day very much yesterday, I think, was around some of what needs to happen for the size of the bond market to increase, for the carbon market the high integrity carbon market to grow. What are we going to do about local currency risk? Yeah. What are we going to do about all those things that get in the way of the finance flowing? And in this last year, there's been a lot of focus on what the MDBs have to do better, how they can be bigger and bolder. That includes ADB. And there's been, a sort of, I think, a shift in the conversation because of the Bridgetown Initiative and things like that, around how do you help bring the cost of capital down in emerging. So where does philanthropy now fit in? Because in some respects, philanthropy was responsible for sort of moving the conversation forward, right? A lot of philanthropies, and also JETPs, etc. I mean, philanthropy played a big role in making. If we've had a little bit of success, but the money still isn't flowing yet to a country like Bangladesh, what does philanthropy do now?
I could use the example of ClimateWorks Foundation. ClimateWorks has actually now developed a new sustainable finance strategy, and it's exactly built on that, given the fact that one of the elements is that cost of capital is a significant hurdle for developing countries. It's how, at points, we could get into programs or projects that are embedded in local communities, where you use local indigenous knowledge, skills, and experience. Once those projects become successful, then you have the ability to say, let's scale and let's replicate. But a key part is how do you bring down that cost of capital? I mean, and we've seen MDBs attempt various forms of incentives to bring the private sector to the table, co-financing, de-risking. That still has not happened, even though we have a variety of instruments that that are extremely innovative. We just saw two this afternoon. And I think then we start to come to the point where elements like the Bridgetown Agenda, the work that the V20 is doing on climate prosperity plans, I think that is where the rubber will start to hit the road in terms of developing out projects that are actually bankable for developing countries. And then having so like what the V20 is doing is actually getting their secretariat, which is now based in Accra, to almost act as an investment promotion to the global north and say, listen, we have projects, these projects are now vetted, they're now bankable, we're looking for investors. And I could speak a little more, but I know in the interest of time.
Yeah. No, thank you very much. Maybe we'll come back to that. So, Imane, I mean, there's been so much in that first 72 hours of this COP, it was like the sort of shock and awe of so many announcements, and many of them involving private finance and the private capital at levels that we haven't seen before. We're talking about public money leveraging private money, helping private money go places it wouldn't go on its own. What excites you, and what do you think the landscape looks like now? What's been your experience?
Thank you. So definitely quite a lot of announcements in the past few days about private money going into all the various climate pledges. Just want to make a small differentiation between what we mean on the various areas on the private sector. So you have what we call the private market, which is what we have everything from a private equity, infrastructure investments, all the loans and all the kind of what we call the real economy project. And then you have what we call the public market. The public market is all the publicly listed companies, the stocks, the bonds, and all the various instruments. So within my firm, I sit on the public market side of the private market, if that makes any sense. And then within our role and what we're trying to do, I mean, of course, there's a big commitment from the industry altogether on this front as well, but then within our role is that we try to create products and solutions for our end investors that have a bit more of a sustainability tilt. So who are our private investors? And here I'm making an overall generalization, not necessarily within my firm, but the end investors, depending on the type of final institution, can be the retail investor. So when individuals buy some sort of stocks or bonds or certain portfolios, then certain firms actually create those products for them. Then you have all the various insurance and pension funds and everything else. So basically people's saving, try to kind of justify it, simplify it that way. So a big part of the private market, especially in the investment manager space, is what we call the fiduciary duty. The fiduciary duty is our kind of responsibility to the end client, and then the end clients, as I said, sometimes are those people within the general public as well. And within our part of our responsibility, we need to make sure that we're following all the kind of trends, for lack of a better word, and where the world is going. And the world is definitely going towards sustainability. So how do we adapt to that? Now, I generally believe that within the fight of the climate change, nobody can do it on their own. So you can have the governments doing something, you have the NGOs, the philanthropy, you have the private sector, public sectors, MDBs, and then we can all, each on our own little areas, try to do something. But is it really going to be moving the needle? Hardly. Or is not going to be done in an efficient way, or as efficient as it should be. So we try to take guidance from all the various regulation, what all the various governments are doing, and we try to also input with the creation of these products and solutions that are tilted toward that way. So some key elements that we've been noticing in the past few days are some key kind of themes that have been emerging. So, well, emerging markets, the focus on emerging markets, they kind of, if you look at it, they contribute to the 2/3 of the global GHG emissions. So is it really credible to talk about solving for climate change without mentioning emerging market countries? Don't really believe so. Then you have everything about the energy transition, and then the energy transition comes into two kind of areas, I would say. The first one is how do we decarbonize all the heavy emitting sectors and industries, and then on the other side is, well, how do we finance those kind of new industries that are needed for the energy transition? And then this is where we come in as investors, because even if we don't publicly lend money from an infrastructure perspective, but our role as steward of capital is to allocate it to all of these listed companies, either on an equity stocks basis or a bond or obligation perspective that are dealing with that. And how do we create new products that are either perhaps emerging market focused, energy transition, climate change adaptation and mitigation. But we see our role is very much working with all the various industry players. And I would say just one point that is very sometimes, not as highlighted in these conferences as it should be, the role of academics, because we have to rely on academics and scientists actually to put some science-based targets and pathways. And I've heard earlier that you're part of Oxford. As you know, that Man Group is partnering with the Oxford Institute to create kind of all of these academic papers and everything else. So, yeah.
Thank you very much. We'll come back in a moment, but let's go straight to Noel. So 2 years ago in Glasgow, you made a big blockbuster announcement, and at that time, the MDB joint statement was more of a whimper than a bang, right? So we had you and the ADB coming out with lots of ambition, a reasonably weak, frankly, I think, MDB joint statement. The MDB joint statement this year, it feels like the MDBs are sort of in the saddle now and realise how much people are expecting of them. But they're big beasts, so they're slow to change and they're complicated institutions. I know you've been working really hard on aligning climate finance. You've got joint frameworks. I mean, you're the director of climate change, so I presume your job is to get everybody else in the institution to point in the same direction. So what does it look like from your perspective at the moment?
Simple question, Rachel. Thanks very much. And
She asked me to wake her up, so I thought I'd do it.
so I am. It's day 7 since I landed in UAE. So okay. So I mean, just for those of you who may not know, the Asian Development Bank, we operate out of Manila. We're a 68-member country. Approximately 47 are DMCs, probably 38 or so active lenders. Our portfolio is in the range of about 24 billion per year. In 2022, about 38% of that was climate finance. And of that, by coincidence, around a similar percentage of that was adaptation finance. So we were just under about 40% of our climate finance was 40%. So back in 2021, yes, our president made an announcement that by 2030 we would achieve $100 billion of our investments would be climate finance. And now, where we expect to stand at the end of 2024 would be that about 35 billion would already be committed in climate finance of that number, leaving us with a target for 65 billion over the remaining 5 to 6 years, which is an expectation that we would have over 50% of our investments would be climate finance. So pretty significant targets that we've set ourselves, and a whole host of changes that need to come with that. So there's multiple ways I can tackle that. I'll comment. I mean, a few things I mean, since that time, obviously, we've had the focus on how we can increase that financing further, but maybe we'll come to that later. The kind of actions we're taking, we committed to full Paris alignment of all of our investments along with the other MDBs. And we've collaborated with the multilateral development banks in developing the MDB Paris alignment framework and the methodologies. And so we set that target that by the 1st of July 2023, 100% of our sovereign investments would be Paris aligned, and that we'd hit 85% of the non-sovereign investments. So we're pleased to say that at the end of the year, everything that's gone through the board since the 1st of July has been Paris aligned, both sovereign and non-sovereign. So that was a substantial process of climate team working together with the sector teams to develop methodologies. And that's been a process, a capacity building process. I think by the end of October, we had assessed over 135 investments with the team working with the processing teams, so substantial. But we've been working on ADB's Climate Change Action Plan and launched that earlier this week, Monday afternoon. And that is where the language is of ADB shifting the upstream. So doing much more diagnostic work with our countries, doing a lot more work on the nationally determined contributions, the NAPs, long-term strategies, and working to ensure that they are articulated as investment pipeline. And so looking at how ADB's pipeline can start to shift, because we actually make decisions about investing in investments that have climate outcomes, whether those outcomes be mitigation outcomes or whether they be adaptation outcomes. Just one thing I want to note about ADB, our region is responsible for over 50% of all emissions, and we expect that to continue to grow. So we're not operating in the African context. So we're not. I mean, it is really important for us to stay in the mitigation focus because we've got to shift that curve down in the Asia context. Shall I continue or let you?
Why don't you talk about some of the innovation, if you can? Because I mean, I think that there's been some really important sort of things that ADB's done for the first time in the last year.
So just maybe I'll start off with the finance side. I mean, so first of all, there's so much talk about the capital adequacy dimension of MDBs in the reform process. So ADB has made a decision, and there's been an announcement of a capital adequacy increase, which will look at about 100 billion for the next 10 years. Now that means that ADB's investment portfolio will grow from that number of around 25 billion up to 35 billion. Now, the significance of that is obviously how do we program that additional loan funding, but how do we program it in a way that it's also going to maximize climate outcomes, and then what it means in terms of our climate finance numbers. So that's a really substantial shift. We have also had this innovative financing instrument, which we call IFCAP. This is using the ADB's loan portfolio to generate a loan book to generate guarantees. And so we have in the intent of leveraging approximately 3 billion of finance into that fund, which we then expect to be able to raise up to 15 billion again for additional lending headroom on dedicated climate-related investments. We have an Asian Development Fund in its 14th cycle. This is vitally important for us for concessional financing. We have a particular window within that which is focused on climate change and disaster risk management, and within that the intent is to start particularly on, focused on adaptation, but to ensure that we are no longer focused on kind of piecemeal adaptation investments, but in a much more long-term programmatic, holistic approach to adaptation investments, which have a long-term pathway to resilience context. And keeping in this same trend, the fourth piece of it is that we have announced a differentiated pricing instrument for our Pacific SIDS just in November this year. So I think those are all really important innovations on that. I think the other one that I'll refer to is the energy transition mechanism. So this is ADB's approach to early retirement of coal, where we're bringing in cheaper capital to allow coal power plants to be retired earlier. So the case that's being worked through in Indonesia is the Cirebon plant, which we would expect to close in 7 to 8 years before the existing date. And then there's a whole area of work we can talk about on adaptation and on in terms of the context of the early retirement of coal plants. Kate Hughes is here, one of our team. And so Kate's been doing a huge amount of work on the whole question of just transition and how that has to be addressed to enable that transition of coal plants. Maybe I'll leave it there and then we can go more specific on other questions.
So what I'd like to do now is to come to all of you on the panel, because we had two very interesting presentations about how advanced the sort of data is now, or the data analytical capability we have, the sort of the independence, the verification capability that's there. There's also a plethora of standard setting bodies out there. FSC's been around for a long time, it's trusted. So, and then we see this innovation from philanthropy, or the innovative capability coming out of the private sector, both on the public and private side of the private sector. And then, of course, there's this very important role that MDBs play, both in innovation for the first time, but also taking things to scale. So I think coming out of this COP, my question to you all is, how do you scale some of this stuff, right? So Uruguay did an amazing bond issue. Chile did something very interesting. What would it take to sort of do that at scale across the Asia-Pacific region? What would the private sector need the MDB to do? What would you need philanthropy to do? What would philanthropy like to do? And obviously you're also advising the IMF. So the IMF's sitting on this new nest egg, right, called the RST. And, eventually that's going to have to flow. That will help countries build resilience. So what do you each need from each other in order to take some of the stuff that we see coming to market now to scale? And you can go in whichever order you would like.
I'm happy to start on this,
perfect.
actually. So I really enjoyed the two presentations that were presented earlier, so thank you very much to both speakers on that. Actually, coincidentally, this is a shameless promotion, but there is a paper that I wrote a few weeks ago about blue bonds, which is kind of how we bring the nature-based solution into the liquid financial market, so to say. It's all in the public domain in the Man Group website if you would like to kind of have a read. But then we're looking exactly at what is needed from our perspective as investment manager to scale this up. And then also, although in full transparency at Man Group, we do not have yet exposure to blue bonds, but hopefully as the market grows, that's something that we can be looking at. But there were kind of few areas that need to kind of improve. So the first one is the framework. Now, ICMA has issued, I think it was beginning of September, some new guidelines about blue bonds, and then they put them in the same place as green bonds, and you have as a part of the green bond principle. So that's definitely a starting point, but we would like to see a bit more framework about what are those instruments going to be looking like. Is the use of proceeds going to be as ring-fenced as everything else? The second element is the data. The data in terms of reporting, and then the data in terms of impact. How do we show that we have actually really made an impact? How do we report on it, and how do we measure it, and how can we be increasing that? And then the third element is, for lack of a better word, investable projects. So you have all of these claims, you have all of these pledges. Where are the investable projects? I mean, if you just look at the blue bonds, for example, there are roughly around 30, 35 globally, and the first one was launched in 2018. Now, you have all of these pledges. Well, how do we move from pledges to actually real concrete projects that we on the private sector can actually invest in? And then if you look at the issuance, and it doesn't matter whether it's from a sovereign perspective or it's from a corporate, you have before even starting to look at the profitability or the investment objective or the investment case of that, it's just, well, what do we invest in? And I think, that whole idea of a framework, this is what it's going to help, because I think, from the blue economy perspective, this is a personal opinion, but I think that a lot of the investments didn't go as much into it because it wasn't really defined. Now, do we really define, for example, blue bonds from a liquid instrument with shipping? I would say yes, but then the market would say otherwise. So do you have all of these sectors, shipping, fishing, ecotourism, offshore renewable energy, all of these sectors that are very much needed for the transition towards net zero and then also climate change, but then they are not in either because of a lack of education or lack of framework, whatever it is called, it's not in the psyche of people, really kind of linked to this kind of blue economy, and then by default this kind of blue in the debt financial market to a blue bonds or blue instruments type of perspective. So I would say framework or rules altogether, data from our reporting, and then impact perspective, and then the third one, well, investable projects.
How do you look at this as a philanthropist or an advisor to philanthropy?
I could actually jump off from the blue bond discussion by my colleague. When we look at the SDGs, the blue economy is the least funded SDG. And if I could use the Caribbean as an experience, I know the Pacific, we should be using the Pacific examples, but for me, the Caribbean is where the adaptation gap is extremely wide. And so when we look at, I'll give you an example, the Caribbean is home to half of the world's seagrass meadows by land area. That the value of that is about $255 billion a year. The carbon sequestration potential is about $90 billion a year. Right? So we now have one country in the Caribbean, which is the Bahamas, looking to monetize that seagrass potential. And why? Bahamas actually has 2/3 of the seagrass potential in the Caribbean. And when it's valued at 15 times the country's GDP. Right? So this is significant. But at the same time, Bahamas is a highly indebted country. And I think this is where the discussion on debt enters, because, in the philanthropy is starting to see that, when you say there's no climate justice without debt justice, I think it's starting to come home. And what the Bahamas has done, and recognizing, look, they can't do this on their own, right? They've got to engage a number of partners, right? And collaboration is key. So the government has to now look at how does it engage the MDBs, not only the Caribbean Development Bank, which is the regional bank, which is, I don't think has the capacity to do that, but to look at possibly the World Bank and the IDB. The second is it has to now find partners who'd be willing to provide political risk insurance, right? So maybe the U.S. Development Finance Corporation, and again, this is where insurance itself comes into play, because it hasn't been a market that has been scaled up in the Caribbean, particularly to deal with the impact of natural disasters. I think if you remember, Bahamas actually suffered a direct hit from Hurricane Dorian in 2019, where 90% of the country's GDP was wiped out overnight. Right? So therefore, risk, I mean, we talk about extremely risky region, and the markets perceive the country as extremely risky. So you've got to collaborate, bring together a number of partners, whether they come from philanthropy, whether they must come from government, and then they come from the private sector side. The other part I think that is also key, apart, yes, from the standards and the rules and regulations, is that these countries need help with capacity building. Because much of this work is going to land in the Ministry of Finance, right? If you might find some in a Ministry of Environment or Climate Change, if there's one, right? And we all know Ministry of Finance people are tugged in all different directions. And therefore, you've got to find a way to really create dedicated capacity. And there's an example of that actually happening in the Pacific region through CFAN, Climate Finance Action Network, where they've actually embedded climate finance advisors in ministries of finance to provide that sort of support in building out bankable climate projects. And that is started to happen in the Caribbean. So I think is a good part of that answer is really around the need for collaboration and the need for capacity building. And that in itself is going to help in terms of bringing down that cost of capital for a region where if a country in the Caribbean had to borrow, on average they'd borrow at 8% above sovereign spreads, abroad spreads, compared to the US borrowing under 1%. Right? So it shows you where that risk, how that risk premium is, and that's just the basic risk premium that we have to deal with.
Can I actually
Yeah.
jump on that? On a more positive note, so what my colleague was actually saying, we start seeing in the financial market some kind of new innovation or solution on this. It's called debt for nature swap. I don't know if people are familiar with that. But we started seeing quite a few actually just this year, and quite a big sizes of investment. So a debt for nature swap is basically recycling and repackaging the debts of certain country on lower coupon, and then lower coupon, better credit rating. But then on the other side is that country will take the savings that they're making on this new bond to work on some nature restoration projects. So just recently, I think it was this year, a few months ago, you had Gabon actually, that was about 500 million, and it was the restructuring of their 2025, I think, and 2030 debt into a much lower coupon rate. So the coupon was about 6.1% as opposed to respectively 7 and 9%. So that kind of made it more appealing. And then the idea, I think they made about like 150 million savings in terms of their interest rate, and that would go to the protection of the rainforest in the Congo, in the Gabon area, and then the sub-Saharan Africa regions as well. There was also Ecuador. They've done some sort of similar financing, and then the proceeds would be going to the preservation of the Galapagos Islands. So we start seeing quite a lot of these debt for nature swap. I personally hope that we will be seeing quite a lot of those in the future. But then the key to these were kind of, for me, they're a perfect example of the collaboration between the governments of certain countries, the MDBs, because all of these deals were made backed by guarantees, and then de-risking, but that was done by the MDBs as well, and then the private sector. It was done in a sort of private placement perspective, but we have some peers and competitors in the industry that have participated on that. But then that kind of goes back to the points that I was saying earlier, is that for this you can actually say exactly what the impact would be, and then you have some sort of a target. And I think we need to move as an industry. I mean, yes, we know that this is science-based, but how do we move into something a bit more concrete? And we need to get into the habit of being able to set a target and to measure it and to report on it, not from sort of just transparency perspective, not just from the regulation, but if you don't set targets, if people don't know what they're working towards, if you can't measure what you promised, then it's very difficult to move ahead. So for these examples, they successfully managed to be doing that. I predict that we will be seeing quite a lot of those. It's kind of relatively new, innovative financial instruments. But then from our perspective, these are the sort of deals that would definitely make further changes. But and that's maybe like, you know, the financier in me, but we need the numbers. You know, the numbers need to make sense. We need targets, we need transparency, and we need everybody to be working toward a clear goal.
All right, a very quick comment.
Yeah, just a quick comment on the debt for nature swaps. I agree in principle that debt for nature swaps provide one innovative solution. My issue is that you don't see the justice and equity embedded in the transaction, right? So if I look at Belize, which did a debt for marine swap a few years back, when you actually go down into the details and you look at the trust fund that has been created, the government has no say in how that trust fund is run, right, and governed. Yet that trust fund is going to dictate all the terms and conditions that the government has to meet in respect of the marine conservation commitments it gave. And if it doesn't, then there's a hit back on its debt profile. So I think, and now that was done when Belize's back was against the wall, right? Because Belize is what we call a serial defaulter. So they love, right, borrowing from the markets and then saying we can't repay, right? But this deal was done, but at the end of the day, when you go into the details, the deal wasn't one that gives it sort of reduces the sovereignty of the country in respect of its own territorial waters and what happens there, right? So the issue is really around how the deal is structured. I don't have, as I said, an issue. It's an instrument, so there's nothing wrong with the instrument in principle. It's how we put that capital market deal together that is also in the best interest of the country.
But, I mean, I'm not as familiar with the Belize deal as you are, so I wouldn't be commenting on something I'm not familiar with. But for all the others, you agree on the terms before getting into that deals. So the terms on both sides are pre-agreed and people can take it or leave it. That's absolutely fine. But then these targets need to be kind of science-based, which I'm assuming that for all the other deals they are, and then you need to have some sort of third party to be on kind of the fiduciary, the arbiter of all of that. Maybe in my simplistic mind, but you give money to people, there is a counterpart. I see that as normal, you know, it's a kind of give and take, and in the private sector, you kind of pre-agree on that, and then otherwise it's considered philanthropy, which is absolutely fine. But then for these deals, you have the term sheets that are agreed from the very beginning, and it's not about the sovereignty versus the non-sovereignty. Just think about it as some sort of contract between two parties where you have a give and take.
So I'm going to let Noel come in here because ADB's had some experience with this, but I would just comment that there's asymmetry of information capacity and power in this relationship. There has been a tendency in the past of the MDBs and the IMF saying, and this is what you'll do with the proceeds, and which, you know, countries really don't like. And then I think there's been this innovation of, in most of the bond issues that I've seen, and certainly in the swaps, you know, you've got NGOs doing technical work from the Nature Conservancy and others. You've got government bodies, you've got private capital, philanthropic capital, public capital coming into it. So these are complicated sets of actors. And I think the question is, how much of these things is replicable, so you can put a cheat sheet out and then how much of it is unique to each circumstance. So these are the kinds of the questions I think we face together as a community for scale. Noel, how is ADB going to lead us out of this quandary forward?
Okay, but I'm going to go way up on a helicopter.
Are you?
I'm going to go pull back up. I mean, I think there's a whole range.
That's
I mean,
fine.
in terms of from the coordination perspective and bringing all these parties together, it's essential. I mean, the numbers that are around, even if you triple the MDB climate finance from the current 100 billion, it only brings us to 300 billion. So we have to bring in private sector. We have to have it at scale. We have to have the philanthropies. We have to have that in the concessional side. I mean, we can talk about country platforms, the kind of effort that's going on to bring all those parties together to ensure that it's led by government and that setting the targets, making sure that your sector ministries, both the infrastructure and the social sides, are working together with the ministries of finance. So those targets, and there's a common vision, is well in place. The kind of the diagnostics, ensuring that the baseline, the data is there. Another area of work I think Rachel is in with all of this context is on the policy side.
Yeah.
How are we removing the barriers? How are we incentivizing private sector and ensuring that so part of what the is this me? Is this the 6 o'clock we should all go home? No, the sound system. But yeah, I think an important part of the work of the MDBs is on the where they have the policy-based lending instruments, and now those are focusing in on climate change and how they are bringing together just the financial the climate architecture, the financial aspects and sectoral aspects through that policy-based work. Some of this is in the context of standards, just in terms of let's look at building standards alone. How are those with your universities, your associations, the engineers, the architects? How are we shifting those building codes so that they are far more relevant to the kind of climate extremes that we are seeing, whether that be in the drought context, whether it be in an extreme rainfall context. Building MRV systems for the kind of the reporting that is required for all of the bonds. And then just working with the ministries of finance on the whole area of the fiscal planning, and so ensuring that we have that full understanding of the risk to economies. So where would you like me to zone in on out of all of those aspects?
Well, I think that there's enormous pressure on the MDBs to fill the synapses that are missing, right? Advise government so that they're providing the policy frameworks that will allow the private sector to do what the private sector can do. Pool philanthropy, and other MDBs are looking at capital stacks with philanthropy coming in and taking some risk or helping you take some risk. Obviously, INCAF was innovative in that sense as well, but that's public capital. And then the innovation, right? Doing it for the first time. And I think there's lots of firsts out there. I think the question here at COP28 is how do you take a first and then scale it so that everybody can do it? So obviously at the same time as ADB has got this ambitious climate strategy, you talked about the fact that MDB capital alone won't get there. So all of the pressure is on you to leverage your balance sheet, right, more successfully, crowding in more private sector. So that's a big transformation for the ADB, which has traditionally been a sovereign-focused lender. It means more equity, means more. So how do you see the role of the MDB in the region, or Asia and the Pacific, crowding that private finance in? And what would philanthropy do to help? What would you need philanthropy to do to help you do that?
maybe I'll flip this into the context maybe of how this is rolling out in the ETM, and if colleagues in the room want to actually also assist me with this, but where we have the situation where it is a methodology, it's an approach on how you actually retire coal plants at an earlier point in time. So how do you raise private capital to buy out the existing debt, reduce that, and then set up a mechanism where the plant can be retired at an earlier point in time. So from the perspective of ADB, this is a methodology that we are demonstrating that it can actually work. So freeing up the scope for other institutions, other private actors to come in and replicate that. But obviously from the MDB side, it's working with the countries to put the institutional arrangements in place to make that happen, to actually work out how all of this is done in a contractual legal process is obviously a long-term investment from our side to make sure that that is all possible. And then the whole aspects of the environmental and social safeguards that have to come with it.
So let me ask you another question, because you've got a very interesting background in that you don't come out of the climate finance space, you actually come out of the humanitarian and development space. More and more people in Asia Pacific are going to be at risk, right? Those are often low-income people living, the low-income in low-income countries, but also the low-income in urban areas and middle-income countries, etc. And, you know, one of the other big-ticket items we, as an international community, fail to meet every year is the international humanitarian assistance number, right? So we're always looking for more humanitarian funding, and we never raise it. And the amount of humanitarian crisis is simply going to keep on. So when you sit back and you put decades of professional experience that you've got, that you bring to this job, from a personal perspective, what do you think it means for an MDB to help the poorest of the poor, the most vulnerable in your client countries? And because your relationship is with government, your relationship with private sector, your relationship with communities as well. But how do you think about the most vulnerable as your ultimate client?
I mean, there's a number of ways at which I look at this. I mean, I think for me in the Southeast Asia, East Asia, Pacific context is one of the challenges that we have is we have these massively growing populations still. And we have a huge rural to urban migration. And we are moving many of those people into future high-risk areas.
Yeah.
I mean, this is one of the things that I think is critically important for us. And you know, we're not active players in loss and damage per se, but it is this question of how do we start to reduce. We do not contribute to increased future risk. I mean, and there's multiple ways that this is possible. If we look at the whole context of I mean, Bangladesh alone, we have massive numbers migrating from the coastal areas into the slums in Bangladesh. I think one of the projects we invested in last year was at the 22 coastal towns, where we're actually able to look at cities in the context of what are the future scenarios. Some of those cities are places where there isn't a mechanism that they can be made resilient. We know at the moment we can use early warning systems, that it avoids loss of life as as extreme events happen, but it doesn't but those livelihoods are destroyed. People go back. But there are towns which can become resilient, and how we invest in those, how we put the systems in place so that they are capable of putting adaptation pathways for the long-term future in place, but also being capable of accepting the migrants as they move, so that you have the capacity in place within the systems, you have the scope to expand. So I think there's a lot of work that can be done in that place, in that space. But I think in the business as usual investment space of MDBs, I think there's still a huge amount of work that can be done. And this is in terms of how we conceptualize investments, even if they're infrastructure investments. But how do we look at the whole context in which that investment is actually going to be made? What is the future livability of the benefits of that infrastructure? Is it the right choice of infrastructure? Is it in the right place? Is it contributing to the livelihoods of the poorer people? Or in some cases, are we actually contributing to maladaptive processes because we're encouraging people with a sense of confidence that they may, that it is the right place to live, it's the right place to benefit their future. And there's a whole area of work in that. Yeah.
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 So I think that brings us all the way back to the very beginning of this session, where we saw that, especially in Asia, Southeast Asia, the Pacific, this extraordinary, ADB and AIIB both sort of say if we can't solve the problems in Asia, then the rest of the world is really in trouble. This young, growing, fast-growing populations, and this extraordinary natural resource, the blue economy, the green economy, so important for the region. And we have the beginning of the tools to be able to value that in a better way. But of course, over the last 20 to 30 years, the arguments over what happens when you price nature incorrectly or you don't value it correctly, and we're just beginning to see private sector tools coming forward from the TNFD and other mechanisms. But it seems that there's a lot of detail still going to be worked out before people are confident in the valuation of nature. So what I would like to do is, there's a lot on the table. We've talked about bonds, we've talked about the IMF, we've talked about the scope and the mandate of an MDB that's transforming itself. We've talked about the green economy, the private sector. So one comment last from each of you before we close down. What would you like negotiators to actually agree on that would help you be able to do what you know you can do if the conditions necessary were there? I mean, if there was one thing you could say to the negotiators, could you at least agree this? What would it be? I'm coming to you, sir, first.
Scale of funding. I think that's extremely important. Various estimates have been bandied about. We have up to the Songway Stern report talking about US $1 trillion. I think that scares several investors. But we need to find a number, right? Land on a number, at least a range for scale of funding. And secondly, funding that is mainly concessional, because we have a number of countries that are highly indebted and the loans are just not going to cut it. It just keeps pushing them further and further into debt.
I would say just guidelines and definitions. We are all using different definitions to perhaps say the same things, but if we spend way too much time talking about it as opposed to just having something that we're all agreeing upon, and we can spend more time doing. So I would say guidelines, definitions. I think for a lot of us, and we just need some sort of direction. And we unfortunately sometimes all feel that it's a little bit all over the place because we all look into it from a different lens, because we all define it differently. So guidelines, definitions, and then we can spend less time talking about it and more time investing and doing it. So, yeah.
Noelle.
So there was another Irish woman who spoke recently this week, or got herself in the media quite a lot. But it really, we've got to get a greater commitment on the phase out of fossil fuels. Unless we reduce the curve. I mean, the adaptation numbers, everything we're talking about, the finance needs that we're asking for, if we don't start to get a commitment of countries that they can phase out of coal, that they can transition away from other fossil fuels earlier, the demands just keep growing. We're already seeing that we're exceeding 1.5 on certain days of the year. If we hit, we're over 2. The adaptation needs at 2.8, 3.5 degrees are just unimaginable if we see, well, if we consider. So that is the big number for me.
So thank you very much. You know, we have to, you know, on a journey which is undulating, right? When you get to the top of a hill, you have to look back to see where you came before you steel yourself for the mountains that you've still got to climb, and every COP feels like that. But there is, I think, a confluence of understanding between private capital, public capital and philanthropic capital about the fact that it can work together in different ways to open up the financial flows that are so desperately needed so quickly by a growing number of countries that are experiencing some kind of debt distress, or for whom the public balance sheet isn't going to work for the kinds of investment that is necessary both for their green transition but also for the extraordinary amounts that they have to invest in their resilience and adaptation. It's going to require the leadership of MDBs, and I think over the last 2 years we've kicked the MDBs into... Are you signalling to me? Sorry. So we've seen the MDBs really, I think, receive and understand that message. And so I'm confident now that the commitments made between the MDB leaders and with great teams like Noelle's working, that's going to start opening things up. I think we've got an extraordinary generation of philanthropists that are global, that are starting to come in. And then, of course, the private sector. I think sometimes a little bit of green hushing, sitting on their hands, not investing right now. Yes, they need definitions. Yes, they need clarity. And yes, you need to get off your hands. So all three are needed to do a little bit more. But please, we can bank on climate, make a difference. The finance can start to flow. Thank you very much. Please congratulate the panel.